How's everybody doing today? Welcome back to another episode of The Banker Next Door. I'm your host, Dr. Joe Berquist. Today's episode, I'm not exaggerating. This might be the most important episode I've done, to date. So we're going to talk about Rule 1033, aka the Open Banking Rule. This is just a monumental. I can't even explain how large this is, but this could shift everything in the world of banking, and that's not hyperbole. This is reality. So there's a number of things that we're going to go through here today. So I hope everybody hangs in. And what I want to do is I want to give everybody this information, and then I'm going to give everyone kind of my take or my opinion at the end. So hopefully stick around to the end. Wait to hear kind of my suggestions, my recommendations here at the end after all of this. But I just want to start out by getting into we're going to go through a couple of PCBB posts. We're going to look at an article from a company called NTT DATA, and we're going to get into a little bit of the genesis of the open banking and where this came from. This is not a law. This is not passed by Congress. This is a rule that came out of the CFPB. And we're going to take, like I said, we're going to get into all that. So let's jump into this. So the first thing I want to show everybody here is this is the evolution of open banking data standards. As open banking becomes more popular, the CFPB is working to establish standards for data sharing, assisted by FDX. Remember that company, and we're going to get back to that in a second. CFIs should actively watch how things are playing out. Yeah, absolutely. So let's get into a little bit of the history here of open banking. So the European Union first introduced open banking rules in 2015. And in 9 years since, the model has taken off in Europe. Well, maybe. Stay tuned on that. I got more information on that coming in a minute. As the U.S. seeks to follow suit, aided by the recent adoption of the Consumer Financial Protection Bureau's open banking rule, financial institutions are bracing for the impact that free-flowing, comprehensive information about people's finances with third parties could have on the banking industry, both the pros and the cons. The key to open banking is a standardized approach to data sharing that will protect people's data. Yet, as the U.S. begins to head down this road, the major question is how those standards will be determined. Enter the Financial Data Exchange, FDX. So following a call from the CFPB for input from the banking industry to help establish open banking standards, FDX is the sole organization that has responded. That's interesting, isn't it? FDX is a nonprofit organization dedicated to creating secure, royalty-free standards for data sharing within the financial industry in the U.S. and Canada. Membership in the organization is fee-based for participants other than consumer groups. Fee-based, meaning they're going to charge the bank to work with them. But what can the bank charge? We'll get back to that in a second. With this amount determined by the member's size, FDX membership comprises major financial institutions like Bank of America, Citi, Capital One, JP Morgan Chase, U.S. Bank, and Wells Fargo, among others, as well as fintechs such as Plaid and Zero, and service organizations such as Fannie Mae, Schwab, and Quicken Loans. The organization was started in 2017 after technology companies, financial institutions, and data aggregators began looking for some continuity in the ways that organizations exchange data and information through open banking. While FDX's banking standards have been fairly visible, the organization is not alone in working to establish guidelines for open banking. Multiple regulations exist outlining varying requirements for the rules that organizations need to adhere to when exchanging consumers' personal data. There has been no shortage of input regarding how data sharing should be standardized. The Federal Trade Commission's 1999 Gramm-Leach-Bliley Act required financial institutions to share a privacy notice to consumers outlining how their data may be shared and used. An early software standard known as Open Financial Exchange, OFX, was created by Intuit, Microsoft, and Free Checks around the same time. In the time since, about 20 different states have enacted their own data privacy legislation. California has been a leader in this area, having signed the California Consumer Privacy Act into law in 2018. This was followed by the California Privacy Rights Act in 2020, which expanding its initial rules. So, hey, look, first of all, I'm just saying I don't like anything that comes out of California. Anything. I'll state that right up front. They got their own issues right now, as everybody knows. So here's a nice little map here with basically U.S. states with consumer data privacy laws. So you can see in the blue, this is comprehensive privacy law. The green is basically narrow privacy laws, and the gray is other applicable law. So kind of a mishmash across the board here. Nothing uniform as of yet. So here we go. Mixed reactions to the new standards. While open banking is inevitable, I love that word, is inevitable. I don't think there's anything inevitable about this. The idea continues to face resistance within the banking industry. Really? Yeah, no, no, you know what? The same day that the CFPB published its final rule, a lawsuit was filed against the organization and its director by the Bank Policy Institute, Kentucky-based, if I'm saying this right, Forked Bank, and the Kentucky Bankers Association. The lawsuit alleges that the CFPB's rule overstepped its authority and outlines concerns regarding data security and consumer privacy. Yes, yes, and yes. Yes, this is not, and I can't stress this enough, this is not a law. You know, Congress, nobody put forth this in Congress. This is just, and again, this is why we had the whole Chevron doctrine case that came before the Supreme Court last year, and why the Chevron doctrine was overturned. Because basically you have, you have regulators like the CFPB acting like Congress, basically initiating rules that in their eyes are laws that are their own laws, and that's not the case. And thus you have the lawsuits immediately here. And there's no question, this is a giant overstep by the CFPB. There has also been criticism within the industry over FTX's position as the sole organization to influence the CFPB's final open banking standards. Yes, absolutely. There are some industry experts who also fear that having a single group helping to set the standards could be unfair and create a monopoly and could ultimately have a negative impact on innovation within the industry. Yes, yes. Standard setters must reflect the full range of relevant interests, including incumbents and challengers, big and small, consumers and firms, and ideally would also represent the perspective of firms that don't even exist yet. Yet CFPB Director Rohit Chopra himself acknowledged that the agency would prefer multiple organizations to help shape the final rules. This potential for a monopoly could particularly impact community financial institutions, which may have less influence in a standard setting process dominated by larger institutions. The answer to that would be not less influence, it would be zero. It could limit their ability to innovate and offer specialized services tailored to their local communities, as they might be forced to adhere to standards designed primarily for larger banks. Yes, absolutely. Absent multiple perspectives, a clear set of standards for open banking could still prove extremely beneficial for the banking industry, eliminating uncertainty and helping to enhance overall security, all of which could assist financial institutions in their effort to reduce risks. Really, I want you to keep that in mind. FTX's proposed standards, for example, aim to improve security by establishing consistent protocols for data access and authorization, reducing vulnerabilities associated with less standardized methods. A streamlined open banking experience could also help institutions provide customers with a more seamless experience and a way to enhance customer trust through greater transparency and enhanced security practices regarding data. Yeah, that's a whole bunch of gobbledygook right there. This streamlined experience aligns with growing customer expectations for digital convenience and control over their financial data. First of all, you're not giving people control over their financial data. You're going to give them less control over their financial data. And as far as this whole nonsense about the streamlined experience, oh, we're going to give everybody this streamlined digital experience. I'm sorry, is all of the regulation out there on KYC and CIP, EDD, advanced due diligence. Like, I mean, is all this stuff simply just going to disappear now that we have open banking? Is that how this is going to roll? I don't think so. Among the requirements that the CFPB has already outlined itself are a need for clearer consent from customers to share their data with third parties. There it is right there. A need for clear consent from customers to share their data with third party and limits surrounding how that data can be used, free access to consumer data, and the development of secure interfaces for the exchange of data. Secure interfaces, meaning APIs. I'm going to get back to that in a minute. While the specifics could still change, the overall sentiment will remain: greater clarity for financial institutions and consumers alike about how data should be exchanged securely and transparently. While FDX is a prominent player, it's important to remember that the open banking landscape is still evolving. There are other organizations and approaches to data sharing, and the final form of open banking in the US is yet to be fully determined. This presents opportunities for CFIs to proactively engage in discussions and explore different options that best suit their needs and the needs of their customers by focusing on transparent and secure data practices. As the CFPB and FDX hammer out final rules, community financial institutions could keep themselves apprised of how things play out. Open banking will only continue picking up steam, and financial institutions should actively be looking at their data sharing processes to ensure that they are as safe as possible at approach in ways that they can help reduce risks. Okay. So now you got that. Now you got like the overview here of what's going on. So the CFPB, just to recap real quick, the CFPB put forth this 1033 rule known as open banking. You have this company called FDX that has come in that's basically trying to set the framework for the data sharing platform, how the data is going to be shared, how consumer data is going to be given to the third parties, and then how the third parties, what they're allowed to do with it, how they can use it, how they can share it and do different things with it. But keep in mind, there's no profit motive for banks to do this. Zero. The banks can't charge anybody. They can't charge the third parties for the data that they're getting. They can't charge customers for for sharing the data with that third party. But FDX is going to stand right up and say, hey, Mr. Bank, you have to use us to implement this thing. So now you're going to pay us. You're going to pay up. And that's one of my big problems with this whole thing, is that not only are you going to give consumers less control over their data, you are also going to cost banks a fortune here, a fortune. So what's happening here in a nutshell is that this rule is basically going to force banks to create what's called a portal. And you can think of it as like a back door to the bank. And say you have a third party, we'll say something like Google. So Google wants to roll up to the bank, and they want to be able to attach what's called an API to this portal to then siphon out all of your customers' data is going to be siphoned out to Google, because Google's going to show up and say, hey, we really want that data on your customers. And hey, your customer gave us the okay, so now you have to give it to us. And oh, by the way, this is the rule, so you can't say no. And, so then you have the whole opt-out thing from the consumer. How is the consumer going to opt out of this? And I asked the question, if the CFPB has gone through all this trouble to implement open banking, and they force all these banks to spend all this money to, create these portals and all this, cybersecurity, everything that's going to have to be around this, are they really going to make it that easy for consumers to just opt out of this thing? What happens if 70% of consumers just decide they don't want any part of this? Are they really going to allow that to happen? So I highly question this whole notion of an opt out. I think is going to be a little bit of a joke. But I digress. So let's go on here. So I want to share something with you now that I've kind of explained what this is with the portal and everything. I want to get into the API thing here for a second. So API security helps keep your data safe, really. APIs are a standard part of every CFI's technical toolkit. They're also a potential opening for cyber thieves. Oh, really? API security measures can help keep CFI data safe. Okay. So popularity of API. So API usage has exploded in recent years, particularly due to the advent of open banking. Research shows that more than 90% of developers were using APIs back in 2020, a number that has certainly grown since then. Some core providers, such as Fiserv, have thousands of APIs that financial institutions could plug into their systems. Okay, however, here's the big thing. According to a 2024 SALT Security State of API Security report, 95% of respondents reported security concerns with an API, their production APIs. APIs come in two flavors, internal and external. Internal APIs work inside a CFI, where they allow different software components to talk to each other. External APIs let third-party applicants access and interact with the CFI's internal system. So what we're really focusing on here is that the major concern is not the internal APIs, it's the external APIs. So you need effective security measures for both kinds of API, which means that both internal, team, and your vendors need to be on board. If not executed securely, APIs can leave an opening for hackers. Oh, wait for it. APIs can leave an opening for hackers, potentially allowing them access to a CFI's confidential data. The right security measures could keep portals open within the API ecosystem, but closed to unauthorized access. Security can also help protect CFIs from non-compliance penalties and operational efficiencies. So then they get into, what your API security plan should include. Use an API firewall. Use third-party security programs. Don't share information unnecessarily. Limit your system to a set number of messages per second. Vet all third-party data. Stay up to date. Encrypt data. All this kind of stuff. But let's take a look at something here. So let's go. Now, I didn't download this full report, but I wanted to just give this to everybody here, and I'll try to make this a little bit bigger here, so hopefully everybody can see that a little bit better. So what's in this SALT report here? So the threat of API attacks is growing, and traditional methods aren't advanced enough to keep up with the rapidly evolving digital landscape. A few highlights from our latest state of API security. The count of APIs are increasing, having gone up by 167% in the past year. 95% of respondents have experienced security problems in production APIs, with 23% having experienced a breach. Despite growing API traffic, only 7.5% of organizations have implemented dedicated API testing and threat modeling programs. 46% of survey respondents say that API security is a C-level discussion. So what is the big thing that I want everybody to take away here from APIs? APIs are a great technology innovation, no doubt. I don't see anything wrong with internal APIs. Internal APIs, it's internal. Your company can control it. If something goes wrong, not a big deal. You could fix it. You could take care of it. My issue is with the external APIs. The external APIs, we have information, and not just this report. There's other information. There's other reports that I could go to, which basically say that APIs are not secure. They're just not. Companies. So what you're doing is you're setting up for basically a cybersecurity disaster. That's what you're setting all these banks up for. And it's not a question of if a data breach will happen, it's when the data breach happens. And when the data breach, and here's one of my big complaints. When the data breach does happen, it's not going to be the CFPB that forced all this upon the banks. Oh, no. It's going to be the bank's reputation that gets clobbered. It's going to be the bank's reputation that gets demolished because they have this massive data breach and all of their customers' data is now out there on the dark web or on the web for anybody to purchase. And that's going to be an ugly day. And don't think for 1 minute that, then you have cyber, so you have to think about cyber insurance. Don't think for 1 minute that the cyber insurance companies aren't looking at this and going, oh, hey, there's all kinds of new risk here. And so what does that mean? Your costs, you're going to go way up. A bank's cost of cybersecurity, a bank's cost of cyber insurance is going to dramatically increase. And again, with no profit, no revenue stream of any kind to offset all these new additional costs that banks are going to have to take on. So, okay, now let me go into this article right here. So NTT DATA, they're a UK company, and I wanted to get back to the fact that this all started in the UK back in 2015. They implemented it. Now, to be fair, this article is from 2 years ago. So basically, the open banking has been implemented in the UK for the last 7 years. But this article, again, is from 2 years ago. So it's basically 5 years into their implementation. Now, what is some of the insights from some of the research that they did? What do they tell them? And again, this is all UK. So the insights reveal that undeniable potential for open banking, with the top 3 consumer expectations from a bank being fast and easy transactions, 80%, higher convenience when accessing banking services, 70%, accessing multiple services through banking apps, 55%. So this is the potential for open banking with the top 3 consumer expectations. That does not mean that these are the things that have been delivered on. These are just the consumer expectations, okay? When the concept of open banking was explained, over half of the respondents, 52%, stated that they thought open banking could deliver a more valuable and personalized experience in the future. However, this is a giant however. The research found the combination of consumers not fully understanding open banking was 60%, not using it or knowing whether they use it was 63%. Let me say that again. Not using it or even knowing whether they use it was 63%. And not fully trusting it, wait for it, 84%. Not fully trusting it is clearly holding back implementation. Concerns around, wait for it, security will need to be addressed before public opinion begins to shift. And that is 5 years into it. And I can tell you 2 years later, now 7 years into it, it hasn't really changed much. So, and why do I tell you this? I tell you this because when you go out and research this topic, you're going to find all kinds of stuff out there that basically tells you that, oh yeah, open banking is super popular and and consumers in Europe, they love it and this and everything. But it's like an onion. When you start to peel that onion back, you begin to see that most people don't even know what open banking is. They don't understand what it is. They don't even know if they even use it. And the vast majority, 84%, don't trust it. They don't trust it. And all these factors are holding back a larger implementation of open banking. And there is great concern around the security of it. But the CFPB doesn't want to tell you any of this. And there is a link to this article in the thing if you want to go look at it. Now, let's fast forward to what just happened this week. So now ICBA, and to their credit, ICBA did a great job. They put out this open banking guide this week, and I will be going through this in greater detail in future episodes because I just can't I can't have this episode just be too long here. But basically, I just want to give you a quick rundown. So what's in here? So they go over what is Section 1033, background on personal financial data rights rule, coverage of data providers, compliance dates, definitions, coverage data, exceptions, developer interface requirements, consumer interfaces, denying access to third parties, responding to requests by third parties, requirements for authorized third parties, standard setting bodies, and then conclusion. Continue the conversation. So this was a really, really good guide as far as just going over everything that's in here. I'm going to put a link to this in the description below. So I would highly recommend everybody go and check this out. So there's a lot of great information. Like I said, I'll do another episode where I will cover this in more detail. And I'm also hoping to, we'll see what happens, but I'm also hoping to talk with some people from the ICBA, maybe do a podcast interview with a couple people where we could talk more in depth about this. All right, so that's kind of everything there. So in the description below, I put links to the two PCBB blog posts that I put up there. I put a link to the NTT Data article if you want to go take a look at that. And I also put a link to the ICBA Open Banking Guide here. I highly recommend that everybody go out there and check out this stuff. Now, to conclude, what are my big issues here with open banking? Number one, and first and foremost, there is no profit motive. There's no profit motive here for banks. Number two, it is going to cost banks. I believe that this is going to bankrupt a lot of banks in this country. They're just not going to be able to afford this. This is going to cost them millions of dollars to build out the portal, create the links for the APIs, make sure that, increase the cybersecurity. They're going to have to hire additional cybersecurity personnel in their IT departments to manage all this. It's going to cost them a fortune with the third-party companies like FDX that they're going to have to work with to share all the data and everything. And they're not going to have any control over this. They're not going to have any say. This is all going to be from the CFPB, from big banks. You have this potential threat of a monopoly posted by FDX if they end up being the only company that comes forward to work on all this stuff. And then beyond all that, beyond the cost, you have the whole cybersecurity issue. You're going to have APIs are not secure. You're going to have events. If this gets implemented, you're going to have events with massive data breaches. Thousands of customers will lose all their information. Then you have, and that's, we didn't even get to the consumer yet. Okay. So now think about the consumer. Okay. If I'm a consumer and I don't want this, is this really going to get, or is there really going to be an opt-out clause for me in this? I don't know. I don't know about that. That remains to be seen. The second thing is somebody needs to explain to me, how exactly do you streamline the process of just, because the whole thing here is that, oh, this is going to give you more control over your data. How does me giving all my information and make no mistake about it, the companies that are going to be lining up here are going to be the usual suspects. It's going to be Meta and Amazon and Google and all the big tech companies that have been salivating for years, okay, at getting their hands on banks' data. They want to know everywhere you go, everywhere you shop, everything you do, okay. And I'll add one little other tidbit here. Could there be an alternative reason for the government to want to get this information out there? And I'll just leave this out here. I don't want to get into like conspiracy theories, all that kind of stuff, but I'm just going to leave this out here. If the government came out and basically said, if Congress came out and said, hey, we're going to pass a law that basically says we're going to have the right to go into every bank in the country and take out all of your data so that we can monitor and watch everything that you're doing, would that pass the mustard test? Would that fly? No, absolutely not, because it's a violation of the Fourth Amendment. It's a violation of your privacy rights. Congress could never pass anything like that. Okay. However, if all this information was now in the hands of Google, Meta, X, Amazon, so on and so forth, the government could simply go and just buy that data from those companies. Okay. And now they have it. Okay. And there's nothing illegal or wrong about that. The government could just say, well, hey, we just bought, we paid them for the data. We just bought it from them. Now we have it. So, could this be a backdoor way into something a little bit more sinister? Perhaps, maybe, I don't know. I have no idea. I'm just putting that out there. But I am so highly concerned about open banking. I think that this is just one of the most dangerous things that has ever come down the pike in banking. I think it's egregious that this was put forth by the CFPB, that they hoisted this upon every bank in the country. And to be fair, there has been no conversation on this. There's been, I know the CFPB will say, well, we put it out there for public comment, and we, but that's kind of a joke. They put that out there for the comment. People put in their comments, and then they just go ahead and do it anyway. So I think that this needs to get to a point where, we need to get politicians involved with this. We need to get Congress more involved in this. You need to call your congressman and say, what is the deal with this open banking thing? Like, I don't want this. Like, I don't want to share my information with all these other companies. I don't need all these other companies knowing, that I go to the food store twice a week, or that I go and buy my personal hygiene products down here. Like I don't need to share this information with them. They don't need to know it. And so that's my stance on this. So like I said, there's going to be a lot more to come with this, and I'll wrap this episode up there after my rant, but I really highly encourage everybody, please, please, please share this episode, get this information out there. People need to know about this. This is because this affects everybody. It affects consumers. It affects banks. It is going to be an enormous, enormous deal. And I can't express enough. Share, please. Share this, get involved with your legislators, call them up, make them explain it, because I guarantee you, they don't know what this is. People don't know what this is. The lawmakers don't know what this is. You'll get a lot of puzzled looks. Huh? What's going on? Open banking. What? Yeah. So, but like I said, if you like this episode, please make sure to like, share, and subscribe. Remember, we are on YouTube, Rumble, and all major podcast platforms. Please be sure to leave your comments down below. I would love to hear back from people on this, to get your thoughts, to see what you think about this. Do you think it's good? Do you think it's bad? What's your take on it? But like I said, with that being said, please check out some of the other content on the channel, and I will see everybody again real soon. Thanks a lot.